Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings to reveal the real story. Today we've got a filing from Sachem Capital Corp that is all about extending a lifeline to their finances. Seems like they're playing a longer game with their credit lines. Before we dive in, if you want more of these straightforward analyses without the corporate jargon, hit that subscribe button. And for those who love a good chat about all things finance, we have a Discord community linked in the description below. Come join us. Alright, let's talk about Sachem Capital Corp. This filing is an 8K, which is basically a report for big, important events that happen between their regular quarterly or annual reports. Think of it as a special bulletin from the company. The main event here is an amendment to a credit agreement. So what exactly did they do on the 21st of January 2026? Sachem Capital Corp, through its subsidiary SN Holdings LLC, amended an agreement for something called the Needham Credit Facility. Now, this facility is a $50 million revolving credit line. Think of a revolving credit line like a credit card, but for businesses, they can borrow money, pay it back, and borrow again up to a certain limit. This credit line is managed by Needham Bank. The really important part here is that they pushed back the deadline, the maturity date for this credit line. It was originally set to end on the 2nd of March 2026, but with this amendment, they've extended it to the 2nd of March 2028, and here is a little extra flexibility they've built in. There is an option for another year. Long extension taking it all the way to the 2nd of March 2029. So essentially they bought themselves a lot more time to manage this $50 million in borrowing power. All the other terms of the original agreement are staying the same, which means the core deal is still in place. They've just rewritten the end date. Now, why is this important for a company like Sachem Capital Corp, which operates in the financial sector? Having access to credit is like having oxygen. Extending the maturity date of a significant credit facility means they have more stability and can plan their operations and investments without the immediate pressure of having to repay or refinance that $50 million very soon. It tells us they anticipate needing this financial flexibility for at least the next few years. It is a move that signals confidence, or at least a desire for operational certainty, regarding their future cash flow needs. They're making sure their financial engine can keep running smoothly for longer. This filing also gives us a snapshot of what is listed on the stock exchange. Sachem Capital Corp has its common shares trading under the ticker SAC on the NICE American LLC, which is a pretty standard stock listing. But what is interesting is the other securities they have listed. They've got several different sets of notes, which are essentially loans from investors to the company with various maturity dates and interest rates. For example, there are 6.00% notes due in 2026 and also in 2027. Then there are 7.125% notes due in 2027 and 8.00% notes also due in 2027. This variety of debt instruments shows they're using different ways to borrow money from the market. And then there is the preferred stock, specifically the 7.75% series accumulative redeemable preferred stock. Preferred stock is a bit like a hybrid between a stock and a bond. It typically pays a fixed dividend, which in this case is that 7.75%, and it has a liquidation preference, meaning if the company were to go bankrupt, preferred stockholders get paid back before common stockholders. Having multiple types of debt and preferred stock outstanding is common for financial companies that rely on a mix of funding sources. It allows them to manage their cost of capital and cater to different investor preferences. Looking at the Needham Credit Facility extension, it is a smart move for managing their short-term financial obligations. They're essentially refinancing their debt, not by getting new money right now, but by making sure the money they can borrow is available for a longer period. This is particularly important in volatile financial markets where interest rates can change rapidly, making it more expensive to secure new loans. By extending the maturity date, they lock in the terms of their current borrowing arrangement for a longer stretch, which can be a significant cost saver and provide operational predictability. Now, let's think about this from a Warren Buffett perspective. He always looks for companies with strong, predictable cash flows, manageable debt, and a clear understanding of their business. For Sachem Capital Corp, this extension of the credit facility is a sign of that management is focused on ensuring they have the liquidity they need. It is not necessarily a sign of explosive growth, but a sign of responsible financial stewardship, making sure the foundation is solid. They're not taking on new debt here. They're just extending the time frame for existing credit. This suggests they are comfortable with their current debt structure and believe they can manage it over the extended period. However, we always need to consider the risks. While extending a credit line provides immediate relief, it doesn't erase the underlying need for that credit. The company needs to generate enough revenue and profit to service this debt over the long term. The fact that they have multiple debt instruments with different maturity dates and interest rates means they have a complex capital structure to manage. Any significant downturn in their business operations or the broader economic environment could put pressure on their ability to meet these obligations. Even with the extended credit facility. So, what is the overall picture? Sachem Capital Corp is taking a prudent step to secure its financial footing by extending a key credit line. This decision likely aims to provide them with the financial breathing room needed to execute their business strategy without the immediate pressure of refinancing. It's a move that shows a focus on stability and long-term planning, which is generally a positive sign for investors and stakeholders. It is not a flashy announcement, but these behind-the-scenes financial maneuvers are often critical for the sustained success of any company. Alright, that is our breakdown of Sachem Capital Corp. Its latest filing. What is your take on this credit extension and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.